5 minutes to go before we wrap up trading hour. Before that, let's get in one more conversation. Belrise Industries reported their Q2 numbers. The profit went up 83%. The top line growth was 14%. Margins expanded. Mr. Badve, promoter of the company, is now joining in to talk more. Thank you very much. And the stock has done very well. It's a recent listing. I think the IPO price was 90 in May of 2025. And now, as you can see, it's about 165, 170 rupees. Let's talk about the top line and then we'll get to your margins and bottom line. About a 14% revenue growth in Q2, 20% in H1. What are you guiding for the full year and H2 in particular? What is the demand looking like?
So thank you for hosting us. Firstly, we're guiding for long-term or medium-term guidance of around mid-teens revenue growth, and we're still sticking to that. We think that the current euphoria that's emerged due to the GST rate cuts should be a systemic change, especially for the two-wheeler segment. And thus, we expect the two-wheeler segment to do quite well over the next few years. And thus, that should also definitely help us in achieving our target growth.
Okay. So while you're very positive on your P&L growth or your revenue growth going forward, in the first half, your operating cash flows, there was a sharp decline here, 73% down on a YOY basis. Can you explain what happened here? And will you see a recovery in the second half because of that? Because at the end of the day, cash flows are important if you need to invest, if you need to grow your business otherwise as well.
Yeah. And I think there were a couple of factors that led to the cash flow being down. I think the inventories were slightly heightened as compared to the start of the year, purely because we were in the middle of festival season. But what happened in between was the GST rate cut change happened, where until the 22nd of September, a lot of consumers held off on buying new two-wheelers, which kind of led to more inventory stockpiling at the tier 1 end, which is our end. And that kind of led to a higher blockage in terms of inventory. Apart from that, we have had 3 facilities come up in the last 3 quarters. One in Chennai, one in Pune, and one in Badve. So all of these facilities, we had to, of course, incur a lot of capex. And all of that has largely gone in up until now. And hence, we expect the second half to be better in terms of cash flow, definitely.
So when you say better, will you see an improvement or the fall will be lesser than what you saw in first half? Just trying to understand your investment pipeline as well in this case.
So we're guided for a capex of around 800 crores over 2 years. And we think we will stick to that. So I think there'll definitely be an improvement in the cash flow in the second half.
So you're trying to say, Swastid, that most of your capex for the Bhiwadi and the facility in Chennai is already in place. And when do they come on stream?
The Chennai facility has already come on stream in the last quarter, and the Bhiwadi plant came in this quarter. The Chennai plant that we are now focusing on will come in the next quarter. And we have another Pune plant that also came in this quarter. So in total, quite a bit of activity happening, but a lot of the capex that we thought has gone through this year. We've already invested around 260 crores in the first 2 quarters. And hence, I think a large majority of the capex for this year has already gone through in the first half itself.
Okay. Very quickly, so most of your revenues comes in from two-wheelers, about 2/3. But you are increasing your presence in four-wheelers and CV. And here you said you aim to double your revenues. By when and what are the numbers we're looking at for four-wheelers and CV?
Right. So four-wheeler and commercial vehicle, we think is a big opportunity. Today, as you mentioned, our revenues from four-wheeler and commercial vehicle is quite small as compared to a larger revenue base. And we expect to double by the end of FY27, so as compared to FY25 levels. And that's already been seen in the numbers. So if you compare our H1 numbers of FY26 as compared to FY25, we've already grown 50%, more than 50% as compared to last year. And what's really exciting for us in this is that the growth is coming across a lot of OEMs. So in the passenger vehicle space, we're working across 8 passenger vehicle OEMs. In the commercial vehicles, we're working across 5 commercial vehicle OEMs. And what's really driving this is we recently did an acquisition of a company called H1. So H1 is a Japanese company. So we acquired their India operations. And H1 are experts in high tensile steel.
Okay.
High tensile steel really allows you to go and do more lightweighting and also create more durable components, which is especially important when it comes to EVs.
Got it. Take that point, a lot more questions, but we are completely out of time today, Swastid, but we'll speak with you very soon again. That's the word coming in from Belrise Industries. The stock is up 8% on the back of strong numbers. With that, we'll do one thing. We'll take your leave on this edition of Trading Hour, but stay tuned. Halftime report is up next.